The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Are you tired of being misguided by self-serving financial service profit seekers? Are you looking for a better way to take control of your destiny and create a financially free path for future generations? Well, you're in the right place. Welcome to the Banking on Your Retirement podcast. We cut through the noise of the often self-serving financial markets with simplified yet foundational financial principles for creating a more peaceful, joyful, and prosperous life. So be brave and be free. This is your home. Now, here's your Banking on Your Retirement host, Johnnyward.
Welcome back. It's Johnnyward, host of Banking on Your Retirement. And today I want to talk about this phrase that was made kind of famous by a book called The Richest Man in Babylon, written by George Clason back in 1926. And that phrase is pay yourself first. And his simple idea was, if you had 100 pennies, put 10 pennies aside and do that every time, and then that's all you have left is, the 90 cents or whatever's left after your tax man takes out from your paycheck. So this idea is really been sort of hijacked by the qualified plan environment. This idea that we'll take money out of our paycheck and stick it into a retirement savings plan or retirement investment plan, as I say, or gambling speculative plan. And regardless of how you do it, the idea was, hey, I'm paying myself first by doing that. And I don't realize I never had the money. I didn't touch it, right? But here we are, or some people like to call it, and it really, makes me kind of sick, but they'll call it tax season. Here we are in tax season. Same idea, right, is that, when you're a W-2 salaried employee, or hourly wage, doesn't really matter, that you're having the taxes taken out, and it's like you don't ever see it, you don't ever really feel it, other than like, geez, I thought I was going to make, $50,000 this year, but I realized I only made or took home $35,000. So again, it's been sort of hijacked, but you're really not paying yourself first when you put it in with, your qualified plan. You're really investing. You're already giving it to somebody else to take action with it. You're not paying yourself. There's another phrase that has been bantered around for many years. I think there's been songs about it. Saving for a rainy day. Remember that phrase? And this idea that it has to be a rainy day. How about saving for a sunny day? It can be either. But if you don't have access to this cash readily accessible to you, well, then you really can't even take advantage of the sunny days, meaning that there's some opportunity that comes along that you want to take advantage of, but you don't have any liquid cash. You don't have any way to take advantage of it. So I look at it like, let's put it somewhere where it is ready for any kind of emergency, any kind of investment opportunity, any kind of experience that you might want to, hey, someone says, hey, you want to come with me to, Europe for the month? I rented a house. All you have to do is pay for your food and your transportation to get there. But even that, for a month, maybe cost you a few $1,000s, right? Where do you have it? Is it sitting available? And even if it is, again, with the infinite banking concept, is you don't want to touch your money. You want your money to continue to grow. You want to keep adding to it, and you want to leverage that money to use other people's money, right? Which in this case, with an infinite banking policy, you are using the insurance company's money. So I just want to focus on this idea that we need to pay ourselves first because if we were ever as fearful of ourselves as we are of the tax man, that we've got to pay or we're going to be in trouble. How about if you're going to be in trouble with yourself? Not that you need to do that kind of fear-mongering with yourself, but make a commitment. That was the idea of The Richest Man in Babylon, the book. Richard Kiyosaki, famed Rich Dad, Poor Dad, he was a big advocate for paying yourself first too. But let's do it because long-term, that is a liquid pile of cash that we can leverage at any time. So let me just kind of look at my notes here and say, infinite banking really frees us up to use that OPM. So I'm going to give you a bunch of acronyms. IBC, infinite banking. PYF, pay yourself first. OPM, other people's money. And say, doesn't have to be pay me or else, right? Like if you're paying somebody else, you're doing it because, hey, they're going to take something from you if you don't pay them, right? If you don't pay your car loan, you don't pay your mortgage, they're going to take your car, they're going to take your house. You have control over who you pay first. And I'll use, some examples in the near future here. I'm not going to belabor this week's episode. I'm going to put us into break here for a moment, and we'll talk about the Liberty Dollar. But I also want to just say we'll come back, and I'm going to give you real-world examples of how I've used these infinite banking whole life policies in paying myself first. And sometimes I actually forgot to pay myself first. And I'll tell you, it hurts. So talk to you in a minute. Thanks.
Have you heard about Liberty Dollar Financial Association? Liberty Dollar is a private membership association that allows its members to purchase silver in different forms, which are lawful for use as mediums of exchange. Liberty Dollar Financial Association is a private alternative currency that is provided to members in both digital and paper warehouse receipts. They also sell physical Liberty coins for your personal possession, or they'll securely store your precious metals for you. They provide members with various services that allow them to use their silver's value as a means of exchange, such as their bill pay service, where they will pay your bills out of your silver account, similar to your current banker. Additionally, they offer a term deposit investment account where currently they are paying out in silver a guaranteed 1% per month, which can be compounded over a 1-year term. Liberty Dollar just celebrated 25 years as a silver bullion dealer, storage facility, and exchange. To learn more about Liberty Dollar Financial Association or to become a free member, visit ldrep.nl/BOYR. That's Liberty Dollar Financial Association.
Welcome back. Today we're talking about pay yourself first. And I want to mention that, this phrase is like, there's more month, than money left at the end of the month, right? That people will do something what Nelson Nash of the Becoming Your Own Banker book spoke of, which is Parkinson's Law, which means that we'll spend up to our income. So that's why you want to pay yourself first. You want to take that off the table, put it aside for safekeeping, right? You don't need to be speculating and gambling with what you're paying yourself first with, right? You can do all those other things maybe at some point, take advantage of opportunities, but you want to pay yourself first because you don't want to, just live up to your income. Living expenses lives up to your income because then there is no saving for a sunny or a rainy day. I did want to also mention that, I own a few different policies on myself, and I had a policy that was due in January, and then I had one that was due in July. I actually have two in January. But last year, I decided in May to buy a new car, and I went out and paid cash, and I took that money straight out of my bank account, and I had a policy that was due in July. Now, I could have just taken that money, put it into the policy, into a safekeeping called a premium deposit fund within the policy that then come July, it would just pull the money out of that fund and pay the premium for the year. But no, I could have done the same thing with what was coming due in January of this year. Could have stuck that money into the premium deposit fund, and I would have already had part of my premium paid. But no, I did the wrong thing, and I'm a practitioner. I literally went and took cash, exactly what I say don't do, right? And I went, and now that cash is gone. I have the car, but the cash, I didn't put into my policy first. And with infinite banking, that's what we mean. Put it into your policy first, right? I have some outstanding loans, some outstanding policy loans, right? But I had a policy, I have a policy again that comes due in July. I had a policy that I had partially funded for January. It was a pretty sizable one, so I got the minimum amount in, and then when I could, I would put the remainder for the annual premium amount into the policy. So I literally could have gone and paid off or paid down some of the outstanding loans that I have with the policies, or I could put it into the premium. Well, I'll tell you, I want to fully fund my policies each year before, if I have any outstanding loans, before I pay any of those loans, because once it gets into the policy and working for me forever, then if I have additional cash, then I'll pay down my loans, right? And that's not the way it is when you take, you've got credit cards, you've got car loans, you've got boat loans, you've got student loans, you've got house mortgage loans, all that stuff. You don't really have a choice. You've got to pay the loans down first before you pay yourself, right? So this idea with infinite banking and pay yourself first, they marry together perfectly, because you have control over always paying yourself first and then paying off your loans, right? Because you want to, once that money goes into your policy, it's in there forever. And that's the beauty of infinite banking. And that's the sure thing. And the reason that you want to do this is because someday you're not even going to be using commercial banks. You're not going to be using credit cards. You're not going to take a car loan from a finance company or auto manufacturer or what have you, because you're going to be borrowing against your banking system's liquidity and its collateral and using somebody else's money. They're not asking you any questions on what are you going to do with the money? Hey, how's your credit score? Are you currently employed? No, you have control over when you pay back everything. And you always want to put money in first into paying yourself first and then pulling out whatever you need for expenses and so forth and so on. So that's a wrap for this week. Please like, share, subscribe, send comments, send me an email. Love to hear from you. Thanks again, Johnnyward, Banking on Your Retirement. I'll see you next week. Thank you.
Thanks for listening to the Banking on Your Retirement podcast. Be sure to follow us on Facebook and YouTube at Banking on Your Retirement. And don't forget to rate and review us on your favorite podcast platform. Thanks again for listening. The information expressed on this podcast is for informational purposes only. You should not construe any such information as legal, tax, investment, financial, or other advice. Personal due diligence is the listener or viewer's sole responsibility.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.